Hey everybody, this is John. Welcome to the free video. Let's talk Apple. Apple, of course, very prominent company. Earnings today, all-time highs. This stock, if you guys remember, it split 7 for 1 a long time ago. So if it was still its old self, it would be over $1,000 a share right now, which, boy, I miss the days. I really don't like it when a big company like that splits. I like it when they stay bigger stocks like that. They're just more fun, but it is what it is. And so the question is, and you can see here it's actually down after hours. It closed at 147, and after hours it's down. It's trading 144.79. So I did an earnings play on this, and the question is like, okay, were we betting that it was going to go higher and did we lose money, or were we betting that it was going to go lower and did we make money, and why did we choose that? So for earnings, the main thing to look at there is the crowd is typically wrong. You see here, so here was where we were, 147.51 at the close. So, about right here. And look at this, 30,000 calls, 31,000 calls, everyone betting that this thing was going to go a lot higher, versus 11,000, something like that to the downside. So just based on that, we decided to sell call credit spreads and then potentially look at a pin. So sold the 147, 152 half call credit spread, so for 206. So if we open up at 144 or anywhere below 147 like that, that's money that goes into our pocket. I also did a cheap iron fly, meaning it's $2 wide, sold it for $1.78, with the idea that if it did fall, but then came back up to like 147, 148, we could make some money on that. That's actually a very nice risk-reward ratio, risking 22 cents to make $1.78. And then after hours, and in order to buy stock at the expected move, so the expected move was about 475 when it first sold off here. I put some a little bit in front of it, picked some up at 144.01. So for Apple tomorrow, what I'm expecting is that we do most likely open up down here, but then after a little bit of a flurry, start to grind. I don't think we're going to go positive. Maybe we'd go to 145 or something like that. But at this point, the NASDAQ futures after hours are down. I believe they're, trading down 1650. I would look at in the morning after the initial selling being a buyer. We just got too many other strong stocks out there. And then, of course, tomorrow, Wednesday, we're going to have Facebook. I think this is Wednesday. I might be wrong on that, but we've got Facebook, you got Tesla, and just a lot of fun earnings there. Okay, one that we added today is Ulta. I mean, Ulta's got earnings in 3 weeks, and this is the one we set up today, and we're looking for this thing to actually kind of pop before earnings. So we did pick up some of the $300 calls out of the money, 24 days out for $4.26. They had a nice close, looking for this to at least be a double, if not more, and trading that one accordingly. All right, so all sounds good there. So I wanted to let you know about a free webinar we have coming up on Thursday, May 4th, and this will be at 7 o'clock Central. And if you go to simplertrading.com/hood, now it's kind of funny, I kind of think of Hood has a couple of different meanings here, but I think this is under the hood. And what we're going to be talking about is Wall Street money managers exposed, and essentially how they fee you to death. So if you've got a lot of money for retirement sitting with mutual funds and stuff like that, it's important to understand how they're feeing you to death, and is there a way around that. So during this free webinar, which I'll be on as well, Bruce is going to be talking about the inconvenient truth that banks and investment funds don't want you to know. Okay, he was managing a $100 million fund for many, many, many years as one of the guys executing the trades and doing the strategy for a large company, and he has been there and sees firsthand what they do. Why investors pulled $214 billion from losing funds as of January, even with the market soaring to new highs. Why 99% of funds do not beat the market, but shamelessly soak you for fees anyway. How the pros, quote unquote, leave your money exposed to catastrophic losses, i.e., does anybody remember 2008? It's hard to believe that that was 9 years ago. I mean, to me, it seems like last year. It's just very clear. A simple way to protect your nest egg so you can finally sleep at night, and how it's possible to earn much higher returns safely and take your money out of Wall Street's rigged game. Okay, so this is a free webinar he's going to be doing. It's going to be a lot of fun, and you can sign up here and get your spot. All right, you guys have a good one, and we'll see you at the next update.